Good morning, everybody. Happy Monday, folks. This is Dee Dee with Power of Three Trading. I'm not here just to teach you the strat, but how to profit from the strat techniques. If you have more questions, however, about the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at Sepia Group. So Friday, let's talk about it. Here are the cues. We'll talk about what we saw Friday, the market sell-off. And then it hit a level and closed. I think it closed near the high of the day. Not quite, didn't take the high, but wasn't at the lows, right? So we drew our broadening formation, and you can see this hit this nicely and reversed. We drew this broadening formation here, right? Because we're at the end of the month, folks. So we're letting this month play out. This is the last, no, we do have one day next week, I believe. Monday's a holiday and we have the 31st on Tuesday. So last full week though of the month. And so we drew this broadening formation from this outside bar here back to this 2-up bar. The reason for that is as price was trading down in the month, we said it's got to take out this outside bar. That doesn't necessarily mean it's going to go to our broadening formation. So we drew this up. To draw it down, it would have looked something like this. All right, and I drew this horizontal line here. Hang on, let me move this. So I just drew a horizontal line here on this 3-bar, but let me show you what that would have looked like if we had drawn it diagonally using the low of this outside bar. Cooperate. Let's do this again. So we're going to take the low of this outside bar to the low of this inside bar, right? So this would have been this is your broadening formation for this outside bar here. But what we did was we drew this trend line from the low of this outside bar down to the low of this 2-up bar. And the reason for that, and the reason why I draw those, is because price action doesn't always trade down to this outside bar. So what we're looking for is maybe some broadening formation pivots as it's trading down, and that's exactly what we saw here. So if you had drawn this, let's blow this up a little bit, on the month, low of this day to this inside bar, this would have been your broadening formation. Will it trade down to this level? Maybe, but maybe not this month. So I like to draw my trend lines for potential broadening formation pivots up. So this is what this looks like, the upper broadening formation for this lower range here, down to this 2-bar, this 2-up bar, because in my thought process, it's got to take out this range, but it may find some resistance. Okay, and so that's why we draw that, and sure enough, it hit it on Friday. And you can see where it hit it here on the daily and reversed. And so those are some of the techniques that I use to kind of help gauge magnitude and potential reversals, because that is my specialty. I like to trade reversal patterns. And so we did see this 2-2 continuation, but you have to understand how far is it going to go. And that's why we draw those broadening formations that way. That'll be some of the things I will be teaching in my small group training. All right, so let's go and look what that looked like real quickly, and then we'll talk about Tesla. And so you can see where price action, let me see what that level was here, about 281, 281.20. And so if we go back here, and you can see that traded down to 279. This is 280.21, right? the low here is 280.21. So price action broke yesterday's low, Thursday's low, traded down to that level. I had about 281.20. It traded down to 280.21. Yeah, and reverse. Okay. And so we'll talk about, you can catch these. I did not trade the Qs, and I didn't trade in the afternoon on these reversals. I typically don't on Fridays, but there was some money to be made here if you had caught some of the reversals, because there were quite a few late in the afternoon. I caught the move down. I did not catch the reversal. All right, but that's really what I want you to kind of keep in mind. When we talked on Friday, I said, you know, a lot of guys like to trade cheapo option Fridays, but they can be tricky if you're trading in a choppy range. But if we get a simultaneous break, then you can see some good profits on cheapo Fridays, and that's what we got, guys, on the Qs, so and the SPY, and as they broke down the broader market, as the broader market broke down, you can see some of my favorite names break down, and I'll show you that in a minute. But let's talk about Tesla, as Jim had tweeted me on this. So when we talked about Tesla, we said we were going to, we would not trade Tesla unless it traded outside of yesterday's range. And this was my note, which was it's got to trade. So we're going to wait. We're going to be patient. If this thing was going to go higher, it had to trade above Thursday's high, which was 734. So that was this note. And then if it were going to go lower, it had to trade below yesterday's low. We did not want to get caught inside this range. So what did it do? It went outside, it traded up. It's on the 6 minute here. Closed down, went 2 down, green, then it went 2 down again. Now it's crossed below -100. I'm interested, but it's still inside this range, guys, and this was my outside bar. So I try to be very consistent with my trade, so I didn't get in at probably the best price, but I reduced my risk by jumping in early. And so once price traded 3, and then we had this 2 bar here, and it crossed, I was like, yeah, I'm gonna just have to jump in. So I jumped in here because price now is crossing below -100, and you can see that here on my 18 minute. And I tell you what, guys, and you can see it here, if you are patient enough, and this is why I use CCI and no one's talking about it. CCI is a momentum indicator. It doesn't necessarily tell you direction, but it will give you a guide when you're trying to trade these ranges as to whether or not there's momentum in your favor. Are there going to still be triangles, subtriangles, TTOs, as Rob called them, triangle layouts? Sure. But it gives me a little bit more confident that I could hold this trade when CCI is trending down like it is here. And no one's talking about that. Once it starts trending up, then you know your time is probably limited. So we're going to talk about this. Where I got out, where I got back in, where I got out, where I got back in. So because this is where the mastery happens, if you will. And then once it crosses over, guys, which is why I said I'm done. There's no reason for me to try to play this game anymore, right? I'm good for the day. So let's talk about it. Here was an outside bar. So if you're thinking about reversal patterns, a 3-2-2 is a potential reversal pattern. When that didn't happen, we got our 3-2, and you see this big candle. We don't like to try to trade reverses on here, right? So this was the low. This is where I said if price breaks. So this was the low of the prior day, which is 694.11. When price broke here, my thought process was it has to stay below this range. So now I'm looking at CCI and we're still good. So I'm in this position here because we're still good. Now you're going to get these TTOs, and this is where I got out. Price hit this level. So what I did, guys, because I hadn't drawn these, I went out on the daily. Let me show you what I had to do here, because now price is breaking down and I had not drawn these ranges. I went to the daily and I said, where is price? It's in this range. I just drew my horizontal lines. I said, okay, price has got to trade, take this out. This was a 2 down. So this was a 3-2-2. It took that. I said, it's in this range. It's got to take out this level first. Then I said, here's another 2 down candle. Remember, it's taking out the lows of those days, right? Because price is trading down. So I just looked at these 2 down candles. I said, take this out. Let's take this out. And then this guy was a gapper. I said, if it continues to trade lower, this was a gapper this day. I just drew this line here. Okay, so that's how I got those levels. And you can see it just broke them down. All right, and so let's go back. So when I'm looking at this, I drew my broadening formations on those horizontal lines. So when it traded here and hit, CCI started to trend up on my 6 minutes, took profit. All right, so this is what you see. It went inside. Guys, if you missed this trade, you had this inside bar here. I'm looking at CCI. They're still trading in this first 90 minutes. And so that doesn't flip until this candle at 11. And so this inside bar, if you're holding, and even if you were on the 60, you had this 3-2. But because look at CCI here again, I love when CCI crosses below -100. The first cross below -100, because it could get kind of tight. So that doesn't mean like here, it's crossing up and it stays below. That can be a tight range. But the first cross, right? I'm looking at these first crosses on CCI of that day. That gives me a clear direction on momentum, right? So you'd have to go back and look at it a couple days. If it's trading in a tight range, you can see it on a daily. If it's inside day, forget about it. But that first cross on that -100 or +100, I'm interested. And so you can see that on the 60. I want in this trade. And so the momentum was to the downside. There was no reversing this until late. And you can see that here when it went inside 60. All right. Let me just delete this line because it's not needed. Let's delete that so you can see that, right? So this is when it went inside 60, and this is where you saw the momentum change on CCI. Get out of this. We're not trading it. All right, same thing on the 90, right? When CCI started to flip here at 12:30, I knew this trend was likely over. And so it was a matter of when am I going to exit? And so that's where I use my shorter time frame. So I'm in this trade here. It hits this broadening formation. I'm out. It goes inside, guys. It broke it here. I'm back in. I'm in the money, right? Because I made money here. I'm feeling pretty good. So I'm in the money here. It trades down, gets close to this. As soon as it trades back up, crosses over, I'm out of this trade. I'm not holding. It's Friday. It is cheapo option. You have no time value, right? So all you have on your options contract is your intrinsic value, and that's the price of the underlying stock. So as long as, and I was in that, I got in up here at 690, my first My first entry was on the 690 contract, but then as price started to trade down, I just took the at the money option, because remember, this is cheapo Friday, so you don't have to go way out, maximize your profits. Cheapo Friday, get your at the money contract and let that thing ride. And so here, price action traded near that next broad information, went inside. As soon as it started to trade back up, I got out. I had an inside bar, I got back in, it broke below this range, and then it started to get choppy. Went inside, I said, yeah, I'm out, came down some here, but I exited here when it went two up. I wasn't gonna play with, because here is a 90 flip. This is at 12:30. So you get this move and then it goes inside. I'm out of this trade. There's potential short here, but this is where you have to start using your brain. You have had 3 hours of puking. You got this inside bar here. What makes you think this will continue? Remember, I didn't have a line here. I drew those broadening formations from those dailies. Now I'm just looking at CCI to see, okay, is this thing starting to flip? And when it, at the 12:30 flip, it started to curve up. That was my signal. That was my signal. Okay. So for you guys who are live with me, prepare, ask any questions. We'll go over this in a lot more detail. The other trade, I did not trade this. So remember, Ross was a gapper. I did not trade this at all, but I wanted to show it to you. We drew these broadening formation. Remember, we had to go way back because it was down some 20-something%, I think. And so we had to go way back to draw these broadening formations, right? This was a horizontal line. And we drew this broadening formation here to here. This was a horizontal line and this was a horizontal line. And so our thought process was, let's wait and see what the market was going to do, see if there was an opportunity for a reversal on this. And what you had was this 6-minute bar. I mean, seriously, look at this, guys. I mean, here's what I want you guys to avoid. And it doesn't have to be a gapper. It could be a TTO outside bar. If this is your, and so if you can imagine, this is a gapper, big outside, a big bar here, the range 74.65, 69.74, let's call it $5 on Ross. That may be its average daily range. And what I want you to think about is, even if this was a TTO and this was a 3, an outside bar, in that first 6 minutes, guys, all of this is inside that opening range. And you can see this is just simply the open for Friday. So this is today's open. This is a script I got from one of the guys on Trading Guide. I don't think he is a stratter, but he created these scripts. Maybe he is. This is all inside this bar. I don't trade these. This will get you killed unless you really have a handle on you know, your inside bars, right? Redrawing those broadening formations, because this is outside of all of this, or shall I say, this is all inside of this. So you would have to, in a case like this, you would want to look for, and the way I would do it is I would look for outside bars, right? And to see where within this range, right? Because all of this is inside this range. And so if you're looking to trade this, I would look for 3 1s or maybe even 2 1-2s to see where I could profit. And I just saw this 3-1 here. And this is your broadening formation, right? So the high of this bar to this bar, the low of this bar, you don't have another bar, you can draw it way up here. But that gives you the false sense that price is going to trade on that kind of slope. So I wouldn't draw it that way. I would draw to the high of this bar. So this would be like a 2 up, 3, 2 down. I would look at it that way because there's not another broadening formation inside this range, maybe on this inside bar here, but you don't have another two bar. It's got to be inside this range, right? So this would be a big slope for me. This would be decent because I know if it trades back up inside this range, I want out. This would be your 3 bar. You may be able to do that because it's all inside this range. That's what we're looking for. So when you're drawing these broadening formations, you want to draw because you don't have a 2 down or a 2 up. So you're going to have to draw something that's going to be higher than this outside bar, right? And so you have this 3 bar here, 3, 3. You could draw it that way. That gives you a better slope. And actually it worked because you would be drawing from this 3 bar anyway to another range, which actually we did. This is the high of this range. We drew from this 3 bar to this 3 bar, 3 bar to that 3 bar. But I avoid these types of trades just because I tend not to do well. But if you can figure out, so you get all these sub-tries, because they're all inside, you got this outside, not outside bar, but you got this gapper, 5-point gapper, and then you got this 3 bar. So this is where you're trying to avoid, which is why we drew this here. You got to get outside this range here. And so if we were to draw this 3 bar, there's really no good angles, no good ranges, right? No good ranges. So I would do a horizontal line here. I say ranges, no good broadening formations, because this is an outside bar. You don't have the next 2 bar higher wouldn't occur until after you get another subtry. So you wouldn't know. So let me say it another way. You wouldn't know where to draw this until after it's been drawn. I mean, after, you know, price action has taken place. So you would just want to wait to get outside of this range, but then you got this to contend with, and it stayed inside. Let me just remove this. This was the broadening formation we drew on the daily. So you could wait and monitor CCI, which is what I would normally do. See how this is trending back up. I'm looking for a reversal to the upside. CCI is now inside here. The broader market is trading down, so it finally broke down with it. And now you can see CCI. It breaks back below that broadening formation. CCI confirms. Let's look at it on the 18. You have an inside bar here. This is where price actually traded down. It's on the 11 after the 11 o'clock flip, but it's still inside 90. I'm not trading it, but there's opportunity. Just be careful. Here's probably the best way I could say it, guys. To make money and to stay in this game, you have to have a strategy that is consistent. And the reason that is important is what I've found over the years is it works one day and then it doesn't. Like you can look at this and say, okay, but there's enough range in here. Maybe it'll work. I'm gonna go ahead and take this trade. And CCI is breaking down, but it's still inside 90. It may work today, and then the next day it may not work. And then you're kicking yourself, and then you start questioning yourself. Oh man, why did I do that? You start changing your strategy. The next thing I know is you're no longer using your inside bars, or you're no longer using your 15 or 18 minute. You're using another time frame. Look, guys, I have tested them all, and I'm just telling you that what I know. It's not the time frames per se. It's understanding the ranges. It doesn't matter if you're on a 15, an 18, a 10, or 20, or 30. You have to understand the range in which you're trading and how far magnitude, broadening formation, price action will likely go to put the odds in your favor. If you think about it that way, you can literally use any time frame you want. Where you have to be careful is that, and Rob will tell you, the 60 is like a new day. I like to use a 90. But where you have to be careful is you have to know when you're trading inside that 60, this is not where you want to be. So it broke down at the 11:30. You had this outside, I keep saying outside bar. You had this big candle on the 60, you had an inside bar. So if you're trading off the 60, now you have some clarity around this trade. It breaks back below your broad information that we drew, right? So this is the open. So you wait for the 60 to close, then it goes inside. There was no continuation pattern here. It trades inside and down. You wait for that 60-minute flip. That's 11:30. Here's what that looks like on a 15. Yeah, 11:30, it goes 2 up. And you're thinking, oh boy, be careful. It's 60 is close to the downside. So it means you have to take this open, which is 72.90, because it closed down 72.90 at 10:30. Yeah, right here. So that means it needs to take this open for potential 2-1-2, I'm sorry, 2 inside 2. Maybe potential, take that open for it to go 2-1-2 to the upside, but instead it 72.82, got pretty close, went up 72.82 and failed, came back, created a 3 here at 12 o'clock, crossed back below. You can take that 2 down, 2-1-2 reversal here. So 2 up, or it's 2 down, but green. Inside bar red, red to the downside. So I tend not to trade those. I use the 90. Why? I've gotten caught too many times with a rev strat. And what that means is it could have gone 1-2 down, tight range, only to be 1-2-2 rev strat. So just be careful with those. But with the broader market breaking down, that would have been a profitable trade. All right, so I don't have anything, well, I do have, I'm going to show you this, and we're going to talk about the CCI again. All right, so this is my list from Friday. I'm going to talk about CCI. We're going to make this just going to be training and how I use CCI. 18-minute candle. I do not like to trade before the first 15, 18-minute close. There are times where I may do that if I'm using CCI. I did not on Friday because I was focused here on Tesla, but I want you to see NVIDIA with this outside bar. Here, because this did not trigger on Friday, it triggered Thursday late, but you have this, it gapped up from the close, and that's what happened, guys. All of these gapped up from the close and traded down. You know, the market is tricky, which is why I prefer not to trade in that first 18 minutes, but you could, and this is where I want you to start studying CCI. For those of you who follow me, we will definitely have this a part of our our coursework, but I want you to start studying your CCI. If you like the way I trade, no one else is talking about it. So this is just a DD as it's momentum indicator. It's not the strat per se, because there will be trades where I will get into, like here, like on a snow 2-2 continuation. If I feel good about the trade, this was inside. I did not trade this, but I just want you to look at your charts, stocks that you like to trade, add CCI, and then go back and do some retesting and look at where you see CCI crossing negative or positive 100 to see if there's opportunities where you could have entered these trades on a shorter time frame. So not CCI on a 6 per se, because it's easy for price to trade down and triangle that out and then come back down on those shorter time frames. But especially on your 15-minute, of course I use 18, your 30, your 60s, your 90s, those first moves, right? First moves to the downside or upside on CCI. And here's an example. Price crossed up on the 18-minute. Why I wait, and now it crosses back down. So it traded up. See here on the 18-minute, it gapped up, traded up above 100. But we're not going to take that, right? Because we have to wait for the market to give us an indication of what it's going to do. The Qs did not cross above 100, but it still gapped up. SPY did. That doesn't mean you go jump into the market. I still have my rule. And if you were to look at this, let's look at it on and the reason for that is I'm still looking at what's happening on these short, longer time frames, right? So this is a SPY, it gapped up, but guys, it didn't trade up. It traded up on this on a shorter time frame. Oh, this is a 15. That's okay. It traded above 100 on a shorter time frame, but the way I look at it is it's still down in what I call the red zone. This is below zero on the longer time frame, and so Rob talks about full time frame continuity. This is full time frame continuity to the downside. Now this is red, green here because on the hour it traded up at the end of the day. But this is full time frame continuity to the downside. I tell you what, if you trade in gappers like I do with full time frame continuity, so let it gap up and then take these inside bars down, the probability of you winning on this day is going to be significantly higher than it would if it gapped down and you traded the reversal against full time frame continuity. So just keep that in mind when you're trading these gappers. Don't think everything is going to gap and continue, right? Gap up with full time frame continuity to the downside. We love those trades. We also love 2-2 reversals like we had here. So this was a gap down, but with full time frame continuity to the downside. We love those trades, guys. We love those trades, okay? This was a hanging man pattern here. Went 2 up, 2 down. We love those trades, okay? All right, so I'm gonna pause here for our recording, and I'll take questions from our live guys. But listen, I'm gonna close here and then I'll take some questions. But just keep that in mind. Full time frame continuity is the strat's way of saying the price action has traded below the how the guys say the 50, the 100, and the 200 day moving average. All right. So just keep in mind, we're saying the same thing. Whether you're trading using the strat methodology or you have a bunch of technical indicators on your charts, we're all saying the same thing. Where's price going? Shall I say, we're asking the same question. Where's price going? we just simply, the way I traded, I just simply use broadening formations to help me with that. But in full time frame continuity is, we can see to the downside, you're in a bear market, to the upside, bull market, right? So that's how we view it. Not everything is in full time frame continuity. We like to look at those months, days, weeks. I use the 3-week versus the weekly. But there's always ways to read your charts to give you a better indication of where price action is going to help you profit from the markets. So I'm going to end with my scripture, Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Let's try to avoid jumping in and out of trades. If you don't have a clear indication or price action is trading inside day, don't do anything. You got this little doji here on your daily. There's no clear indication of what's going on. Just don't trade. It's okay not to trade in a day. Find something else to do, because that's the mindset that I have. If I'm not feeling it, I'm not going to trade today, guys. I like these moves. And I can tell you, if you can avoid getting stuck in some of these choppy ranges, and then you take the moves when the broader market is selling off or soaring, and I don't care if it's just trading 2 or 3 days a week, if you can manage that, you can do this full time. But this is psychological, guys. So I want you to focus on your psychology of trading and think about why you're not winning. Don't focus on why you're winning, because it could be that you got lucky. Focus on why you're not winning, okay? Because we don't believe in luck here. We believe in strategy. We don't play the hope game. While we are a group of praying folks, I can assure you the Lord doesn't care about the market. What he cares about is how we are, using the talents he's given us to further their kingdom, okay? So let's focus, let's be diligent, and let's be good stewards. All right. Thanks everybody for joining. Take good care.